نروح لآخر جلسة معنا في اليوم الثاني من هذا المؤتمر الثاني لأسواق رأس المال العربية. الجلسة بعنوان شفافية ما بعد التداول Post Trade Transparency، التطورات الحديثة في مجال التسوية والتقاص. رح يكون معنا السيد أحمد عويض الرئيس التنفيذي لبورصة فلسطين وهو مدير الجلسة. ليس مالي الرئيس التنفيذي بورصة دبي للذهب والسلع. محمد داغر رئيس إدارة الحسابات بنك يوروكلير. سامح العلول شريك ومدير تنفيذي بشركة مناف للبرمجيات. محمد أبو الرب مدير المعلومات بنك ستاندرد شارترد الأردن. وأندرو ديسون الرئيس التنفيذي بالرابطة الدولية لإخراج الأوراق المالية ISLA. تفضلوا جميعا وأهلا وسهلا فيكم.
It looks like we're missing a panelist. Samih. Okay, no matter. We can start. Good afternoon, ladies and gentlemen. We promise not to keep you too late, since it's just before lunch. And of course, we're very grateful for our distinguished panelists for agreeing to take on the responsibility of graveyard shift. It's usually the most difficult in any conference. So now, this afternoon, we're going to be talking about post-trade. Definitely, post-trade, I believe, is sort of the part of the capital market ecosystem that it's slightly underrated, I think. It's always considered to be sort of the less appealing, the more complex, well, it probably is, aspect of the business. And certainly over the last year and a half, every conference I go to, everybody's talking about blockchain, DLT, digital assets. And it is my opinion that this part of the business is probably the most likely to be impacted by any serious developments on the technology side. In spite of all the talk and all the buzz about blockchain, I do believe that so far there have not really been any real implementations beyond sort of the proof of concept stage. So I would just throw the first question to our distinguished panelists, and it would be, where do you see this going, and how quickly, first, do you agree that it is on the post-trade sphere where this is likely to make much more of an impact in the capital market ecosystem, and how quick and how soon are we going to see these kind of changes taking place, and not necessarily just in the Arab region, more globally? Who would like to start? Les, maybe?
Yes, thank you, and good afternoon. I think in the past with blockchain, I think blockchain was a solution looking for a problem almost, and the pace of the fintech evolution was leaving some of that coordination behind. It was very fragmented.
Les, may I ask you just to speak a little bit louder, or maybe put the microphone closer to the microphone?
Okay, yeah. Sorry, is that any better? I was in the past, I think blockchain was a solution that was going around looking for a problem. It was a very fragmented set of evolution, and because of that, it was very uncoordinated in terms of coming up with a production-ready and proven system. I think things have matured since then, but there's still a wait-and-see approach by many players, including my own company. And I think the role of the traditional financial services industry has, to some extent, been overtaken by this technology. We're reaching out to the regulators as an industry who likewise have been overtaken by the pace. That isn't a criticism at all of the regulators. It's just that the natural pace of evolution has overtaken us. But when it comes to blockchain and to the question of acceptance by our financial services industry, this is where I struggle, because it can't just It's disruptive technology in that regard. And it's got to be so much better that it needs to displace what's already there and proven and tested and has been working over, in some instances, decades. So it can't just be as good or slightly better. It's got to be so much better to encourage the industry to step away and move away from it, which is why, other than Bitcoin, I'm struggling to think of a large-scale acceptance of the DLT methodology. That's not to say that there aren't benefits, but for a business like myself, we're the largest derivatives exchange in the Middle East, but we're a small exchange in the scheme of things. We can only, like many other participants, can only be observers in that particular development. Thank you.
Thank you, and good afternoon, everybody. Just by way of introduction, my name's Andy Dyson. I represent the International Securities Lending Association. We're based in Europe, but our remit covers the region here as well. And we are delighted to be part of the last 2 days, which, from my perspective, have been very informative and quite thought-provoking. Just on the point that we were just talking about, I completely agree with Les that, in fact, I was going to say, had I been asked first, that blockchain's one of these sort of solutions that's looking for a problem. And we've noticed over the last sort of 12 to 18 months that there are some very, very clever solutions out there, but it's not clear exactly what they're there to solve. And we've actually started looking at the problem in a slightly different way, which is, what are the efficiencies that we want to generate as an industry that we think these technologies may actually help us with? Now, one of the things that we've been looking at, and this is a little session on clearing and settlement. Securities lending is one of the few physically settled markets still operational today globally. And therefore, we physically move vast amounts of cash and securities around the financial ecosystem every single day. And that presents some very real challenges from an operational perspective. And one of our biggest headaches that we spend many, many hours on is figuring out why trades don't match, why they fail, why particular instructions are failing to match in central depositories and international central depository systems. And one of the things we notice is that a lot of it is down to nothing more than, if you like, operational systems that exist within existing companies. Many of the banks that you all face off to have core legacy systems that we estimate are between 25 and 30 years old at a very minimum. And that just produces many anomalies and inefficiencies. And one of the things we're looking at is taking a step back and say, how do we actually think about codifying the things that we do from a best practice perspective, things about identifying a loan, identifying a piece of collateral, a return, a partial return. And we've actually done some work, it was mentioned yesterday, we've done some work to look at a thing called the common domain model, which is effectively, in some ways, putting into codified form best practice from a post-trade perspective. And we think that as we go through that process, and I'm quite optimistic that we will look at that very, very seriously in the next 12 months, that presents almost in a box the perfect operating model for a market such as ours. And it's then, once you've done that, you have the opportunity to say, well, how can we use that unified approach to develop things like blockchain and decentralized ledger technology? So I think, if I'm honest, what's happened is everyone's got this great idea of what the solution is, but let's see what the problem is first, and how do we take those steps to arrive at these technologies?
Just out of curiosity, amongst your members, how many, are all of them seriously have sort of blockchain related initiatives? Are they looking, do they really see it as sort of a transformative technology on the business model? Are they willing, is it sort of a, I've heard it mentioned once that it's the doomsday weapon that will completely disintermediate the entire financial capital market infrastructure. I disagree. I personally disagree, because I do believe, like you said, the present system works very well in most cases. And there are definitely very important difficulties when you talk about DLT and blockchain relating, particularly in the financial services business, where you're dealing with a lot of proprietary information, and you really have to have sort of clear guidelines of who has access to the information, when, etc. I find it quite challenging on that front.
The final thing I'd just say before I hand over to colleagues here is that these types of investments are not insignificant. And when you run a business that's sort of getting by day to day, as the head of that business, it's a very brave person that says, I want to spend a lot of money that's going to be an investment that will pay back over a 5 to 10 year period, when most people in most banks are judged on one thing: how much money you're making this year. And I think that's a huge challenge for financial services in general. I think it relates back to the last panel, the idea of short-termism, particularly in banks that have to perform against stock market evaluations. It's a very brave person that says, I'm going to get rid of that stuff that sort of works okay, to your point, and invest in this brand new technology when the incremental benefits aren't necessarily that obvious.
Sameh, as a technology vendor, what do you have to say about that? The mic, sorry.
بدي احكي شوي عن السي سي بي اللي هي المقاصة المركزية.
احنا هلا بس بنحكي على موضوع التكنولوجيكال انوفيشن على واثره على البوست تريد سي سي بي كمان شوي. If I may. We can post that later, it's a bit back.
About blockchain.
Yeah, we're talking about what kind of impact do you see as a technology vendor? Do you agree? We are the business practitioners here, you know, Les, Andrew, Muhammad and Muhammad. So it's always interesting to see the sort of the technology vendor point of view. You know, how do you see it? Is it a threat? Is it an opportunity? Are you doing anything about it?
Yes, but I think the blockchain for the Arab world at this time is very challenging. It's not an early stage. It's in an early stage to adapt it in the Arab world at this time. This is, from what I think, it's expensive. It's challenging, very challenging. Some of the Arab countries and some of the institutions here, they start accepting to adapt the blockchain, and I think after quite few of them pass the testing phase, it will be more clear for the rest.
Good. Mohammed Dagher, you of course represent an important player in the post-trade sphere, and what is Euroclear doing anything in particular about this? What are you guys doing? You know, where do you see this going in terms of your business model?
First of all, I'd like to thank the organizers of this event for bringing in such a good community of people together to discuss issues that are quite current in the region. Coming back to Ahmad's question, Euroclear is one of the largest post-trade platforms as a central depository. Contrary to what he says, it's not a very complicated business, but it is sitting at the far end corner of the bank. Usually they put our people in the basement. So it's not really in the public image, but basically the platform that we run has been running for many years. Parts of the platform are already hitting retirement age, and we've been renewing pieces of it. And since the blockchain technology has been picking up a lot of steam among the different financial industry participants, Euroclear has to make sure that we are aware of what's going on in the market. We have to understand what this new technology is bringing, and we need to see whether there is some kind of benefit that can come out of it that will apply to our business line. Because the worst thing that can happen for an infrastructure or a business line is that you don't pay attention to the current trends, and one day you wake up and you're insignificant in the market and you don't understand why. And we've seen this happen quite often in the technology sphere. If you see, I think 10 or 15 years ago, Yahoo was the biggest thing on everybody's mind in the internet, and today really Yahoo we're struggling to stay alive. From the distributed ledger technology, we've already entered into 2 test scenarios. We've taken 2 proof of concepts. The first one was looking at physical gold settlement on the London market. And we participated in the development and testing of trading through the physical gold movements on the London exchange while keeping track of the transactions and the cash flows for those trades through a blockchain platform. Once that proof of concept was concluded, there was quite a lot of results that came out. It is incredibly inefficient from an energy perspective. It takes considerably more computing power to construct and maintain the blockchain than it does to maintain a server database somewhere. And the other problem is really the scalability of the distributed ledger, or a private ledger, for example, was quite limited in that scope. And if you look at financial markets, you will have to be able to book several hundred transactions a minute, an hour, a day. Whereas in the blockchain world, because you need to update several locations with the same information every time a transaction happens, it is taking a considerable amount of time to get one transaction booked through. Another major problem that we saw with the blockchain is on the transparency or the opacity of the platform. If you want to make it a transparent platform where all the information is available to the users, you will be breaking global privacy laws. You're not going to disclose everybody's transactions to the whole network. And generally speaking, the most visible issues on the platform is distributed ledgers or public ledgers are not going to be a feasible solution for any financial market or business. Probably a private repository which eventually will look like a central server running the platform would result in what probably exchanges and central depositories will work with. But the technology itself is really, just as Les and Andrew were talking about, it is in its infancy, and it is really a major solution that looks beautiful, but nobody really knows which problems it's going to solve yet.
So why do you think we're talking about it so much? Particularly in the capital. Why are we always talking about it like it's the next big thing, if it's not? Because why is that? Is it because everybody is just a buzzword, or people don't want to be left out? They're not quite sure that it works, and they're just doing it on sort of basis of like a Me Too thing. You know, oh yes, we also have a sort of a DLT initiative in our organization. Or, I mean, this is the impression I get. You know, we don't believe it's going to work. At least not. You know, there would need to be significant changes to our business model before it does. And but we do talk about it quite a bit, huh?
We do talk about it. The mathematical models behind it are very interesting, and it's really built a new industry and a new science behind the way that information is stored and shared across a network. But I think it became a lot more famous because of the illegal activities that were running through these new currencies that had been created. I'm really talking 4 years ago when the Bitcoin scandals came out, that all this illegal activity was running through unnoticed and unseen by anybody in the authorities or with the regulators. And that's really what brought the first round of attention to the technology, is that huge sums of apparent money, because really it's not even sure that this coin has value, intrinsic value going forward, has been moving around without any possibility of tracking or tracing it. And I think that was the first trigger that caused a lot of attention to this. And that's when a replacement for cash that is untraceable by the authorities does look like something that is interesting and something that is pretty to look at for the financial institutions.
Hamad, as a person that I've worked with extensive experience in technology and definitely in post-trade, in custody, clearing, do your opinions vary significantly from the rest of the panel, or are we all in agreement?
I think you know, I may have a different opinion based on the fact that whether we like this or not, technology has been serving us quite so well in the world. So I believe, and I know little about blockchain, but you know, it's basically a payment system to move away from cost and basically move away from the bank's cost and create a payment system that can be freely moving from one person to another or one institution to another. So I would love to see, and although this hasn't been really tested, and it's premature to really judge on whether it will serve us well, the blockchain, or will not serve us well. I do believe that we should go in the capital market with any technology, with any advancement that would eliminate a risk within the capital market. And currently, all capital markets, or probably some, especially in this region, we are suffering from the counterparty risk with regards to cash and cash settlement. So if the blockchain can be employed to eliminate this risk of the counterparty, I would vote for it.
Pivoting slightly now away from the technology challenges, let's talk a little bit more about the Arab region. There's certainly movement thinking now in some markets about setting up new infrastructures in the post-trade sphere. Particularly, I'm referring to CCPs. I believe there's a very, very serious effort underway at the moment in Saudi. I think Kuwait will probably follow, maybe UAE. The question is, when does a market operator or a regulator decide, when is the time when you would think that you would need a CCP, and why? And at what point in time in the evolution of a capital market? For example, I come from Palestine. We have a fully cash collateralized market that trades only in cash equities. There's really no sense and really no need at this present stage of investing in such a complex infrastructure. But at what point in time do you get to a point where you decide, well, this is what I need to be doing? And for what purpose? Andrew, if you may.
Yeah, great question. I think that at one extreme, somewhat tongue-in-cheek, we might say that central clearing tends to arrive after there's been some sort of crisis. So in the post-financial crisis in Europe, the arrival of central clearing was seen by regulators as a pretty smart way to think about eliminating or reducing counterparty risk. That's sort of one extreme, and there is clearly evidence of that. I think what's more important, actually, and what we're seeing in Europe fundamentally is the arrival of central clearing. And in our markets, in securities lending, it's been quite problematic for lots of different reasons. But what we are seeing is that if we look at the financial ecosystem, and I think you alluded to it, is that the bit in the middle, which is the counterparties, the banks predominantly, that face off to each other on behalf of either clients or their own proprietary books, there's just not enough capital in the system to support that activity. And the way that the Basel III regimes and in due course Basel IV are going to restrict those trading activities still further, once again in the post-crisis era, then counterparties at either end of the value chain have to figure out smarter ways of doing business with each other. And central clearing is one, because it means that you take off the table the potential of facing an RWA counterparty with potentially 100% RWA, and in the context of European regulations, a central counterparty falls to 2%. So the numbers immediately stack up when you think about switching your exposure. Now, that's all well and good, but actually now there's another school of thought that says actually there's too much business going through central counterparties, because what would happen if one of those had a problem? But I think that, to answer your question, that's when they tend to arrive, after a problem, but also now people are using them as another route to market. And I think that's what they are.
I absolutely agree. I mean, there's an emerging debate, particularly in Europe now, is what do you do? You've consolidated so much of the risk in the CCPs, and now that the CCPs themselves are beginning to develop a sort of a, too big to fail syndrome kind of thing. So, Les, if I may.
Yeah, thank you. I actually run a CCP. As I say, the DGCX, the Gold Commodities Exchange, has a wholly owned subsidiary, DCCC. That CCP provides clearing services to the one exchange, of course. It could provide clearing services to many. Why is it successful over its 13 years of history? Yes, because it's got to a level of global international standardization and accreditation, particularly its ESMA license, and more recently now its MAS license in Singapore. The business that we operate, it's what's for metals, FX, equities, and hydrocarbon derivative products. It is handling between $2 and $3 billion a day that is coming through that CCP for a one exchange in Dubai. And why is it able to handle that? Because of the certainty and the surety that the counterparties have that they'll have that financial guarantor at the end of the day. They know they're going to get their cash, basically. So to the question of why they come about, I listened to Andrew's comment, which was quite interesting. They only come about after failure, and I think that has merit. But why are we talking about it in the Arab world? I think is because the cash equities markets are struggling, and they're looking to see how they can evolve and what the next logical products will be. We have many cash equities markets in the Arab world, and other than 2 or 3 examples that I'm sure we can all think of, most of those stock exchanges are finding the growth somewhat limited, shall we say. And so therefore they're looking to see whether derivatives, single stock futures would be a logical extension. It is, but we need certain measures in place. You need that proven CCP, okay, tick, but you also need a reliable and robust index to settle those derivatives products off. We have other issues in Dubai. I run a Monday to Friday business, 17 hours a day. Why wouldn't I? It's the global markets. But we're going to have to open our CCP on the Sundays as well in order to complement the full product suite of Sharia compliant products that we have going forward. So there's a lot I could say about CCPs, because I've always grown up with them in US, UK, and Europe, and it has to be the logical next step of evolution for this region.
So it's initially product driven. There are certain products for which you would absolutely need a CCP.
And my fear is it's going to be top down. It's going to be driven by exchanges and regulators scrabbling for revenue growth, when actually it should be a bottom up, what the market really require, and where is the demand. So until I see that on the street demand for these sort of products, I think it's not going to be as successful as it could be.
I mean, there are examples in the Middle East, definitely. I'm thinking of the GCC, where the regulators and the exchanges took initiatives in terms of, introducing new products to the market, and it just simply hasn't worked. The appetite has just simply not been there, neither for issuers nor for investors. And this is part of the problem: is what do you do? I mean, my view is that it would have to be integral as part of a sort of an overall strategy for the entire sector. I mean, it's not just enough for this is a kind of an argument I have with my board all the time. It is not enough for the exchange or even the regulator to venture into new products and new services if there is really no need and no actual client demand for such products. It is definitely something that Arab exchanges struggle with. The answer, so what do we do? Any insights? If you were running, well, you are running an exchange now, but I mean, if you were running one of those cash equity only exchanges, how would you see it going? What would you do? Given that you have this knowledge of,
I think
it would need to be top up.
But setting up a clearinghouse is an expensive business.
It is.
And
And actually, it's not just for the whole continent, it's also for the activity coming from the US. You have 1 or 2 clearinghouses in the US covering that, that business. So if you look at the size comparison between the size of the European markets and the size of each of the markets in the Middle East or across the Arab world, you do see there is a very large difference in the volumes and the activity that's running through these systems. And as Les was saying, I mean, having the flows of each of these markets split across several entities, it really becomes, firstly, very expensive to set up for each of these entities, and it will become very expensive for the participants of the markets to cover their activity across the different sectors. But I think what was discussed earlier during this conference, the passporting of allowing investors to access different markets without having to physically enter those markets would prove to be quite a positive point. So for example, if the UAE and Saudi end up having an investor passporting setup where UAE investors that are already registered and set up on one of the exchanges can directly access the Saudi market through their local licensing without having to be physically in Saudi Arabia and physically registered there, that would open up the market to allow just 2 CCPs to maintain the coverage of the whole market. For example, the one of DCCC, it's the one that's owned by DGCX, and the one that's going to be created in Tadawul in Saudi Arabia in the next few months, I guess. So really, the consolidation of the risk within a very few select entities is quite important for the cost saving of this initiative, because really at the end of the day, what the CCP is doing, it's removing a big block of the risk of your counterparty and the cash flows between you and all the other counterparties in the market. But also, it has to be an economical one. At the end of the day, the actual de-risking is a very costly setup for banks. And you can see that the CCPs taking in collateral instead of cash, for example, on the larger markets, offers some sort of savings on that activity. But if you maintain many CCPs within a restricted size of market, and each of them doesn't reach that critical size, you will never be able to mitigate those extra costs, and you'll probably never be able to move out of the targeting of new business and new flows phase and the maintenance and development of new business lines for the future. So rather than having 20 CCPs or 5 CCPs in a single market doing pretty much the same activity, it would probably be better to concentrate that on 1 or 2 CCPs in each market, and each of them specializing in their own type of activity.
In Europe, especially in Europe, I think, please correct me if I'm wrong, banks hold major stakeholder in CCPs. Like a few years ago, it was 35 to 40% of CCP's ownership by banks, by commercial banks. And they even run the CCP. About 20% of the CCPs in Europe are run by banks, by commercial banks. This is very good to maintain the stability and the backup for if anybody, or if any of the participants default on paying their dues. And this is very important to keep the system running and no defaults. If any defaults happen, they have like a margin calls, and they can liquidate to the other participants and so on. This is one of the major things that we lack here in this region. Here, CCPs, if any, like in Saudi Arabia, yes, they're working on it. Yeah, they're working on it. We're waiting for a success story to see how it's run, how it's built, who backing it up. If any defaults happens, what's next? That's one of the major issues. And of course, there are a lot of laws and regulations need to be enhanced, need to be looked around, and either change or make new regulations about it?
I think the need for a CCP really depends on first the need for the CCP and why, and the fact that in this part of the world the depository is doing this job. It becomes more comfortable from the investor point of view is to accept the depository as playing this role. However, moving this role to another counterparty would depend on the counterparty itself and whether this risk of this counterparty, because with the clearing counterpart, with the clearing, we cannot really eliminate risk of the counterparty to zero. However, we can control it and we can accept it. In my business, in my previous business, I worked as a clearing party for international brokers who are not recognized in this part of the world. So we became as a clearing agent between the investors and the international broker and also the depository. So moving the risk from one side to another would depend on the acceptance and controlling the risk of the counterparty.
So post-trade in general, I would think, is usually associated with cost and complexity, and not really with opportunity and revenue. Would you say that this is an accurate statement? Do you agree or disagree, and why? I mean, Leslie, it would have to be you since you are running a CCP,
no,
so you could probably talk a lot more about the opportunity and the revenue, and maybe less about the challenges and the cost.
The post-trade processes are not sexy. They are boring, and it's very but they're really, really necessary. But the opportunity for revenue generation, no, I don't see it. I think, again, let's think back what the client wants. The client wants efficiency in terms of those underlying procedures. Typically, the clearinghouse can develop that. But unless my fellow panelists disagree, I don't necessarily see the back office regime being geared to revenue generating, and arguably nor should it.
If this is the case, why are all major exchange groups trying to acquire clearing houses and CCPs?
Why have they?
Yeah, why are they? Why is the London Stock Exchange a major shareholder in Clearstream, for example? Huh? Oh, in Euroclear, sorry.
Typically, the big exchanges have their own clearing houses, of course. If you look at ICE or CME or even NASDAQ, they are very vertically integrated entities, typically having their own matching engine, their own screen, their own clearing house, and their own exchange. There's a very vertical methodology there. So if you already, like those large exchanges, if you already own your own proprietary clearinghouse, what you're more likely to do, and what ICE, for instance, have more recently been doing, instead of going down the route of acquiring more exchanges, they're acquiring companies that provide the necessary infrastructure, the plumbing, if you like, the data providers, in order to make that infrastructure work.
Just something I'd add is that I must admit I didn't expect to be talking about CCPs today, but it's a fascinating discussion. One of the challenges that we have from a post-trade perspective in our world is that if half the business that we see before us moves to a central clearing platform, that means half hasn't. So that means member firms have to support both. So actually, in fact, in the short term, the support for the post-trade activities of central clearing actually add to your burden because you've still got the legacy business to support as well. So we've got some quite big challenges in Europe. For example, UCITS, which I think were discussed briefly yesterday, are one of the biggest asset-owning class of institutional investors in Europe today. They can't actually do central clearing because the role of the depository within the UCITS world means that they have to have the collateral against a loan in their books. So it being held in a CCP doesn't actually work for them at the moment. So we've got some quite important challenges, which means that it's quite unlikely, unless we have a regulatory imperative, that the whole market will move to central clearing. And that presents some back office challenges, because you're going to go down before you go up in terms of efficiencies. Having said that, I do believe that central clearing should play an active part in our market. I'd estimate somewhere between 10 and 20%. Today it's sort of zero. There are other reasons for that, which I won't bore you with. But I have one question actually for you, Les, as you run a CCP. One of our challenges is we don't see two-way flow in our markets. Lenders tend to lend to borrowers, and that's it, right? So that means there's no two-way flow. Is having a two-way flow important for the success of a central clearing platform to get those benefits of netting?
Oh, now, netting and bankruptcy in the GCC, that's an interesting topic. No, I don't think necessarily that the two-way flow is. I think what you're looking for in a liquid market is a balance of the counterparties. Typically, and I've worked for NASDAQ and NYMEX and CME and other exchanges across the globe. What you're ideally looking for is that balance. So you've got the natural shorts, you've got the natural longs, you might have some HFTs, some natural producers or generators. And with that comes the ability for a trader pressing a button on my screen to know two things. One, is he going to get paid? Hence the CCP and then the robustness of the model. And two, can he get out of a position if he needs to? And that's down to the liquidity of the underlying market, which comes to the balance of the counterparties.
Complex and costly, or is it an opportunity and it can actually contribute to the business? Or is it just a headache?
There is opportunity in it, because if you are not mitigating your risk with a counterparty, and this is really going back to the risk side of the transaction, is let's say each bank and each institution, if they have a sound risk policy, they are going to assign specific weighting and specific exposure sizes to every counterparty that they work with. And if you're not mitigating the risk enough for certain counterparties, then you will hit the limit of transactions with that counterparty quite rapidly. What the CCP will do is it will mitigate the risk in a much more structured fashion, and it would reduce the weighting of that risk because you are receiving collateral against this exposure. So the actual transaction of collateralizing your activity with the CCP, yes, that is an expensive movement that everybody would like to avoid. But the volume of activity that you will be able to do with your counterparty once you have mitigated that risk can increase substantially. And generally speaking, if you look at the costs of these activities, you tend to see that the first wave of collateralization up to a certain cash value, depending on the market, will come in as cash collateral that is being placed in the proprietary accounts of the CCP. Eventually, as that amount becomes larger, it becomes too expensive to keep cash parked on the side and covering your exposures for whatever activity you're running through with that CCP. So people tend to move to the next level of collateralization, where they use securities as collateral. And you're going to use securities that the CCP accepts as collateral. And then in that space, you start moving into, generally, you're going to look at ISDA agreements, where you're collateralizing the exposure using a standardized contract across the world. On some occasions, people are using ISLA agreements to cover those exposures. But once you start using securities as collateral, your cash cost of that collateralization with the CCP is gone. You're basically using assets that are parked on your account for whatever other regulatory purpose, but you're using it a second time to collateralize your activity against whichever activity you're doing that needs to be collateralized with a CCP. And eventually, the volume of business that you can do with each of your counterparties increases quite significantly because these risk removal entities are sitting in the middle. So I do see that, yes, it is a cost to run this operational structure, and it may look like a burden to the market, but the benefits out of setting up and managing your risks in an adequate fashion allows you really to have a lot more flexibility on the amount of the volume and the number of transactions that you can run your business on. And at this day and age, I'm pretty sure nobody can disagree that the financial markets is a business of volumes and no longer really a business of making your margins. We're not in the 1900s where you had Mr. J.P. Morgan making 20 to 30% profits on each.
And one thing I've just
not
add
anymore. I actually strongly agree, Mohammed. I think it's probably a sign of a growing, evolving, more diversified, more active market. So absolutely, yes, it's expensive. Yes, it's a headache, but in the long term, it's absolutely worth it, and it is a moneymaker. Yes, Andrew.
And just more broadly, you mentioned
just briefly,
about,
please, because we need to open the floor to the audience. So very quickly, if I may.
Just think that one of the things I think is important is scale. You've got to have scale to be successful today.
Great. So we have about 10 minutes before lunch, and we would gladly open the floor. So if anyone has any questions that they would like to address our esteemed panel, any issues that they would like to comment on, we're more than happy to take your questions. Oh, there you go. I guess you're just hungry, so we will call it a wrap. And on your behalf, I would like to thank our esteemed panelists very much for participating and for enriching this debate. And of course, we would like to thank you for bearing with us. Thank you very much, and hope you enjoy your...
Thank you, panelists.